Good afternoon and welcome to Bull Market Stock Show. This is your host, Rian Hobson, and we have one hell of a show today. I just need to apologize for the internet connection and starting a bit late. I had a problem on Friday and also it persists still today. I hope it will get sorted out very quickly. But we're sitting in a bubble that you have never seen before. And I did wrote about this in my book, The Ultimate Depression. It will definitely happen. And I think the possibility where it can happen in October is highly possible. You can look at gold. Gold is supposed to go up a long time ago. You can look at Bitcoin. Bitcoin is supposed to go up a long time ago. Neither of this went up with all the inflation in the world. So if I will explain to you also why buying the dip will definitely not work as well, because this bubble that will burst will crash everything after the break.
Keep your finger on the market pulse with the News Alerts tool. Stay up to date on the latest sentiment across all the major asset classes. Uncover bullish or bearish signals tied to specific assets that could be developing before major price moves, and track how news sentiment correlated with price in the past. Track the news volume on an asset, its fear index, and get a better feel for its underlying strength. All with News Alerts, your central hub for market information. That's higher trading from MarketsX.
Good afternoon and welcome back to Bull Market Stock Show. This is your host, Rian Hobson. Please, there's a link below. Subscribe for my YouTube page and please click on a link below and register your account. Fund it with $250 and get classes absolutely free. Listen, this thing will definitely disrupt and there's absolutely nothing that anybody can do, not even the Federal Reserve. Now, the first signal was actually gold. Gold did not move anywhere. It went to 1760 and then it's about to go back down again. If you can see on the chart, there I have gold. You can see I'm sitting but in the red, but I sold gold and it actually went to about 1760 and then it just can't go over there. And then if we look at cryptos, this is the platform of markets.com. Excuse me, this is the web trader. This is Bitcoin. Bitcoin is being, sorry, that is not Bitcoin. Bitcoin is being sitting and battling at 47,000. It was at 52,000. It came back. It's sitting now at 47,000. With all the inflation in the world that is there, nothing is currently moving up gold because gold is the best inflation hedge that you can find. And also Bitcoin, because if you know of the purpose why Bitcoin was started in the beginning was because of the madness of the Federal Reserve. That's why Bitcoin exists. Now, obviously you would think everything is getting up, everything is going up, gas price, oil price, everything is going up. You would expect, and the Federal Reserve that prints money, you would expect that gold and Bitcoin supposed to go up to be the good hedge, but none of the sort goes up. Not silver went up, nor gold, nor Bitcoin went up. Now, also very importantly is this. Now, the Federal Reserve, as we know, the Federal Reserve has been printing money now since the pandemic, or I would say since 2009, 2008, but this is now the pandemic, and it's been printing about, it's like 90 billion, 120 billion a month of stimulus that they've been printing now consistently. Now, if you, in logic terms, if they print so much money, then you would automatically think that, listen here, there is a lot of money in the system, so people will spend. Now, this is the other chart that I will show you. This is what we call in economics the money velocity. Now, just to show you what is the money velocity, or to explain the definition for you, money velocity, I'm just going to go here for you in. The velocity of money is the frequency at which one unit of currency is used to produce domestically produce goods and services within a given time period. In other words, it is the number of times $1 is spent to buy goods and services per unit of time. If the money velocity is increasing, the more transactions occur between individuals in an economy. You can go on there. You can actually go on with that and read more when it comes to money velocity. Now, the money velocity, which is actually the story where people spend money, is moving from one point to the next, or going to buy something, whether it's food or services or all of those things. So which means the money velocity here at this graph isn't an all-time low. An all-time low. So with all the printing that is actually going on in the economy, nobody actually spend the money. So where the hell does the money is going? Where is it going? So one, the money is only going into the stock market, or it could be that it goes into savings. But definitely the main thing where money is supposed to go is actually in the economy, to the people, where the people spend the money. So with all this printing money that is currently going on in the economy, it does not reach the people. It only sits in the stock market. Now, if you go back to the chart or to the platform of markets.com, I actually was showing someone earlier also about Alphabet, for example. This is one of the stocks, the shares that you can see, that Alphabet. If you look at Alphabet, for example, is pointing down. With all the stimulus in the world, is pointing down. Amazon reached highs. It never went on further, although it's sitting nicely here on the 50-day EMA. But if the money velocity is low, which I just explained, how the hell can Amazon push further on? Take another one, for example, Facebook, for example, although Facebook is a bit up, but look here, the same story is going down. So which means with all the money that is being spent, good day, Regan, sorry, got actually quite a lot of things here. But with all the money that is basically being pumped in the economy with the Federal Reserve, it does not reach the people, because the people at the end is the one that buys airplane tickets, is the one who buys a refrigerator, is the one who buys, I don't know, a computer, for example. Because when the people are buying, that is where the stocks are actually gaining its value, because the revenue will say that. But in this thing, as it clearly indicates, the money velocity is not at the people. Nothing is pushing up the money velocity, or the movement of money is not going anywhere. So this means then or it could be that people are saving, or people are buying stocks, and people are not actually spending their money. So if people are not spending the money, so this means there is no value in the stock market. And that means that the stock market needs to crash. Because on the other side also, gold is not going up, as I said, because if it was that the Federal Reserve is pumping all the money, it means that people will spend the money, so which means inflation would have gone through the roof. But that's not the case. Gold did not reach anywhere highs. It didn't go to 2000 as what I thought. So when I looked at the money velocity, and I said that the people are not spending. So which means the big crash needs to happen. Now, also very importantly, in October, it's earnings seasons where the big companies need to report their earnings. Because that is where the big question mark comes in. It's when it is going to happen. I say it could be in October. And I think I'm very positive it could hit actually October. The thing is, what is the trigger point? The trigger point could be NFP, because I do expect an increase in the unemployment rate. Two, it could be bad earnings from two big companies or banks, and that could also create the trigger point. The main thing is, what I actually put this whole emphasis on today's podcast, is the money velocity that did not increase with all the printing that is actually going on in the economy. And that is what I wrote in my book. You can actually go to my website, which is bullmarketsnetwork.co.za, where I actually did publish this book, and every time the central banks came in and mess up my prediction. But this time around, I doubt that that will happen, because even with all the printing money that is going on from the Federal Reserve and central banks across the world, the money velocity, and especially in the United States, did not go up. So even if they do print more money, the money is not going where it needs to be, and which is with the people. And if the people are not spending money, there's no way in hell that you can get a stock market that can go up. It's impossible. So please do register your account below fund it with $250 and get my classes absolutely free, because I can guarantee yourself there's no way in hell that the stock market will not crash. And it's always a story when it comes to the stock market crash where people will say, but you can buy the dip because there's still a lot of money on the side. As I said now with the money velocity, it doesn't go to the people where the people need to buy products. It does not go there, or services. It's just sitting somewhere, savings or something. Some people is hoarding it or something. But the money is not going into buying goods and services, as I just illustrated with the money velocity. The thing is, will you be ready? And as I said, there's a link below. Register on the account, fund it with $250, and get my classes absolutely free. That's it from my side. I hope you guys enjoyed today's podcast. And then I will see you guys again. Hopefully my internet will be on. Then I will see you guys again tomorrow at 1 o'clock. Bye-bye.